soil. A fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield coming to you live from London. Apologies for the delay. We had some technical issues with the streaming host that have now been resolved. So hopefully everybody can hear me loud and clear. A big shout out to everybody that's made it live today. Simon, first in this morning on a bullish morning. Love to see that. Joshua Walker, great to see you. Hans, dear old friend Hans, it's brilliant to see you back online, mate. I know you've been super busy recently. Erica, Moral, brilliant to see you here as well, mate. Already got Ondo on the screen, ready for you to go. Ricky Garcia back in the house again. Hello. And obviously a really, really big shout out to everybody that's watching this. We've got the numbers coming back in now. I appreciate we're a little bit later than planned, so I do apologize for that. So it's our Alt Request Wednesday. Moral has given us a nice heads up. Thankfully, as Erica's alluding to, they did have some issues with TradingView yesterday. There was a bug in the system that actually put us out for a little while. But, you know, credit where it's due. I did manage to get hold of their technical team. They very, very quickly resolved it for us last night. So fingers crossed, no issues today. And also fingers crossed that there's no bleeping sound. So let's get rid of me and get this up large and in charge. Guys and girls, if we've got any alts or any pairs that you would like me to take a look at, please do let me know. And that's what today is all about. We're going to rip through some big top downs. We try and focus a little bit more on education on a Monday. Okay, but then on a Wednesday, we try and rip through some pairs. But if you do have a question about anything that I cover on here, please do ask. We've got a fantastic community of people, very knowledgeable group who will always help out. And obviously, I will make time to get around to it as well. And if I don't, then it's something that I'll cover for you guys next week on Monday. All right. So all the drama aside, let a few more people just walk in the door and take a sip out of my oversized tea mug. Because like you didn't know, I talk so much that basically after that first sip, it pretty much goes cold. All right. So yeah, GME. Yeah, really, really interesting one. This is getting a lot of hype at the moment. Pepe, RN. This is what we like to see. Of course we can. Pepe, RNDR. I think we've been ripping a little bit on RNDR, haven't we, Ricky? I think you've been crushing that one lately. So look, want to start with this one on the daily. Okay. Now, what's really interesting for me here is there's a couple of things that stand out to me straight away. So typically looking at it as I do from a point of liquidity, I'm looking at where it really seems likely that price is going to kind of attack next. Where's the maximum pain, right? For example, when you see these kind of long, or what I would call like an abnormally long wick, this, for example, this one, for example, what it tells us is that when price came down to this level, it found a lot of buying pressure. The bodies are where price tried to go. The tails are where price tried to go. The bodies are where they succeeded. So here, price was desperately trying to push down, but got bought up really, really quickly. We can see it finished in this nice hammer candle or a pin bar with a short nose. And then we got that pop, all right? Now, the liquidity resting under that low that caused all of that bullishness is then a really good place for us to start looking for reversals when we come back down there. And that wick down there tells you everything you needed to know. The bullish engulfing candle that followed it was your indication that price is then seeking out liquidity a bit higher. And what we do is we aim for the clear and obvious high. So you could absolutely aim for this one, for example. It's flanked by two lower highs. But ultimately, if I'm asking myself, okay, if I was if I was entering on a higher time frame here, where am I going to put my stop, here or here? I think I'm going to put it here, right? So that's where we look for. These areas then typically become quite important for support and resistance as we move forward, and we can see that the market has failed to close below that level since. Okay, just to give you some insight. So when I'm looking at that, I'm looking at where liquidity is resting. Now I'm looking for either sloping highs. For any ICT traders that are out there, they would know this as low resistance liquidity. Okay, or I used to call it liquidity clusters if you're talking about looking, depending who you study under, right? I'm very fortunate to study under some amazing people in the industry, but however you look at it, naked high, naked high, naked high, naked high, right? So if we just do this exercise very quickly and we go that high, obviously make that something that you guys can actually see. So that high hasn't been swept by that high, which hasn't been swept by this high. You can see here, leaving all of these failure swings, and these often like to get run. So that's what's making me think that we could have this kind of push up towards the liquidity resting up here. Crypto madness indeed, Peter. Great to see you back on the stream as well, mate. ETH BTC, yeah, looks very close to the bottom. Let's take a little look at that as well. We've seen a lot of seen ETH lagging quite a lot in this market this time, and for me that's actually a little bit more of a positive sometimes. Just kind of sitting there laying a little bit dormant, often means that when the sentiment really starts to change in the market is the time that the market loves to flip and really kind of take out those over leveraged positions. Especially Raphael, hello mate, and Williest as well. Brilliant to see you all guys, and thank you very much, Peter. So aside from sloped resistance like this, then I'm also looking for equal lows, all right? Now, these aren't exactly equal, but they're equal enough for me to think, okay, we've got, again, another failure swing here. We've got this. So either price is feeling really bullish at the moment, and we've just taken this kind of interim low here, right? In which case, if we then see a recovery, then, that's the next viable target above us. But the most logical one, personally, I think, is this one, which is at 0.90307. All right, so we've got liquidity resting below us, liquidity resting above us. In truth, in a situation like this, what I would typically be looking for is a move like this, and this doesn't vary to that. Would be different in terms of it is in the RWA ecosystem, exactly, so it can have a little bit of a mind of its own. All right, but typically I like to see these kind of moves here where we flush some liquidity, we get back above, step back into a bullish structure, and then start to kind of move on these highs. All right, so I don't think it would happen that quickly, but you get the point. All right, so flushing out the liquidity that's under here gets people super bearish. We take out these lows, looks like we're moving below them, looks like we're about to lose support here. And starts to get people bearish. What that does is that then builds up even more liquidity down here, because what happens, people that were long here that have their stop loss resting under here, that becomes a great liquidity pool, right? Because that then turns into a market sell order. What you end up with down here then is loads of liquidity. Yeah, loads of sell orders, and major players can step in and say, do you know what? I'll take that bet, and I'll fill all those sell orders with my buy orders. I'll take the other side of that position. They get very little slippage, and then you see these big expansions, okay? So we're going to take a little look at that as well. Crypto 101, hello, mate. Would you call this accumulation or distribution? Okay, yeah, it's an interesting one. I think Hans has got a good kind of answer to this as well. Market makers manipulating, so yeah, a bit of accumulation happening here, which is exactly how I kind of see it as well, right? So it's very, very interesting one. It's definitely, I don't think it's a distribution phase yet. Typically, we haven't seen that kind of displacement. So if we look at this, for example, you come back down into here, okay, you've got a pullback here, you have a small accumulation, then you have your distribution, reaccumulation, distribution again, or expansion in this case. Then what we see here is we see this point of reversal. And then when you see this kind of big sharp move down here, you get two very large body bearish candles, right? So you get that displacement below the previous low, right? So this low here. And then if we look at that there, you can see how that low becomes a real key factor. When price displaces, meaning you get a really strong body candle close, or ideally you get a close through that leaves a fair value gap, then for me, it's a sign that the sellers have stepped in, yeah? So as the sellers stepped in, you come in here, and then price sees this area as resistance and ultimately then sells off as well. Are we lagging? Oh, possibly, guys. I'm just trying to have a look on my screen. Do let me know. Just looking at Ondo at the moment. Just making sure you're not getting caught in any power shedding over there, Hans. But do let me know, guys, if what I'm saying doesn't match up with this. I'm just on the swing low of the Ondo chart, just kind of moving that around at the moment, just to make sure that we're not lagging. Okay, perfect. It might be that you're caught in a little bit of load shedding over there, Hans. All right, mate. So the reason that I'm saying that, let me just pop that back on for a second, is look how deliberate this move down is, in the same way that we saw this move up was very deliberate, right? So with this move down, and then we're distributing. And where to? What we do is, we take our Fibonacci and we look at the range. Yeah, from the low to the high of this move here. Let me just put that into premium and discount for you. And what you can see is that as price comes down, it reacts down here in discount, which is where we favor long setups. And then we're reacting from this beautiful bullish fair value gap. So this is where we would hunt down our longs. So just to give you a little bit of context on that, the reason I don't think this is distribution, I mean, when you look at it kind of here, really, what do we have? We had this pump, price dropped down to here, okay? So then what we're typically looking at is when you have an impulse move like that, yeah, so I call this an impulse range. There's a lot of really, really good people out there that teach this. I mean, Trader SZ, probably the range master, I'd imagine, then Trader Dank as well, is very close behind. Another guy called George, who I've met through Twitter, who's very good as well. But as we're coming down into this here, we see we get this impulse move up. Then I'm looking for the first low after that move, okay? So then I'm taking the high to the low of that. I'm saying, like, okay, basically price is caught within this, yeah? So the other way that you can do it is you can wait for the impulse move down and then for price to come and set the first high here. And what we can see, and don't be afraid to change your ranges, guys. If you take that as the high and that as the low, and price just isn't getting anywhere near this upper quartile, then you can say to yourself, okay, actually, I think it's probably more likely that this has set the higher. Okay. What's really interesting about this is you can see how we haven't really kind of taken liquidity either side of this. Now, obviously, you can draw this range in a lot of different ways. Okay. You could allow it from the bodies, which makes it pretty clean. All right. Then you can see deviation, sell-off, etc. But ultimately, what we're looking for here is price in a point of consolidation. All right. And for me, it absolutely is. So while price is within here, obviously, this is a trending move. I think we're now just looking a little bit at liquidity gains here, guys, and seeing, okay, do we come and take this low, take these equal lows down here, which I still think is a really, really tempting target. We've swept this kind of local level here, which should be attached to that one. So now we're saying, look, if price has got enough liquidity here without running this and starts to get bullish, then I would say that we're looking at this being really bullish, all right? Thanks, by the way, guys, as well, for confirming no lagging. It might just been one of those days, Hans. All right, so I would actually quite like to see this. I would like to see price run down into these lows before kind of recovering, because I think it will give it a much stronger ability to recover by purging all the liquidity resting under here. All right, let's take a look at it on the 4 hour as well. Very welcome, Moral. Very welcome indeed, mate. So again, I still really like this as a target, right? But what we can allow ourselves to do, no worries, and you are not the only one that suffered some technical issues the last couple of days, believe me, my friend. So we can see that we've got equal lows here. And actually, really big shout out to this guy. I've only met him recently. Someone recommended this indicator to me. Anybody that's really interested in using highs and lows is this one, Equal Highs and Lows, by a chap called Matthew. If you can't find it by searching through TradingView indicators, reach out to me on Twitter or through the Bird Nest, and I'll get you a link to his page on TradingView. Really, really simple. You just set the look back length, what type of thing you want and what color you want. And what it does is it picks out perfectly equal lows. They have to be perfect, right? Now, we're very, very happy. I'm certainly really happy to trade relative equal lows like we showed you just a moment ago, right, when those lows are very close together, as is with this one. You can see they're not perfect. Obviously, this was taken on a higher time frame as well, right? But these areas tend to be really, really good liquidity pools. Okay, so they're areas that we look for a reaction. Now, what we can see is that on a 4 hour scale, we've created these. All right, so the equal lows down here. Now, this starts to become really, really interesting because now, using the same principles as we did on the daily, we can see we've got this growing, beautiful liquidity pool above us, right? Just checking in at the moment on the markets as well to see what we've got. We've got the dollar index down. We've got a little bit of a pump on equity markets, although NASDAQ's kind of flailing a little bit. We need to remember we're in a very, very volatile day for news. All right, so yesterday we had PPI, then we had Powell speak as well. Managed to catch some really nice trades actually with the trade club yesterday because of that. Just injected that beautiful volatility in that we like to see for our intraday trades. And then here, coming on to the 15th, I know you can't see this, by the way, guys, so I'm not, being my usual dinosaur self. I just want to kind of familiarize you guys with it. But we have at 1:30 today, huge injections of news into the market, right? So in about an hour and 10 minutes from now, we've got US core CPI month on month. We've got core retail sales. We've got CPI. We've got CPI month on month and year on year. And then we've got the Empire State Manufacturing Index. And then we have retail sales month on month as well. So we've just got this huge news day. All of these are able to inject huge volatility in the market. All right. Oh, the walking. I thought I just saw Ghost in capitals, and I thought you were shilling me a ticker to go and take a look at, Peter. But yeah, I mean, you're real rock and a hard place over there for your voting at the moment, aren't you? Which is really interesting. Okay, so let's just pop back for a moment. Just trying to see if we've got any more kind of key news. No, we've not got any more key kind of news catalysts at all happening today, which is fine. I think it's just you want to be aware of those type of things because they do inject such volatility into the markets, all right? And when we get that, it's something that we don't really want to ignore because they do have an effect on risk markets, okay? Now, from a 4-hour scale, what's quite interesting about this is we really don't have many inefficiencies down here, or in fact, any that haven't already been rebalanced. That means we don't have any gaps, all right? No fair value gaps down here. So it's a little bit rock and a hard place because we've got a really key liquidity pool resting down here. And I really do like the look of these equal lows here as well, okay? The 4-hour isn't really giving us much to go on. Price is just kind of currently stuck here underneath this order block. All right, so I do think that if price can close above this, I think we really take a nice clean run on these highs. All right, but let's take a look at it on the 15-minute as well and see if this is giving us anything to kind of work with here. Now, obviously, you can see on the slightly less liquid assets or the more illiquid assets that you do get a bit of gapping, right? So that definitely brings in an extra layer of complexity when you're somebody like me that kind of trades the gaps, right? But what we can see here is this looks like a pretty strong rejection coming from here at the moment. I think what I would say is price is either, just trying to see if we've got any equal lows. No. I think price is either reaching for liquidity down here before it makes a move higher, right? Or we're looking for price to run this level, and then we want to see what the reaction is at this level. This is more of a kind of intraday play, obviously. But I would honestly say for anybody looking at this on more of a on more of a higher time frame or intermediate time frame play, then I wouldn't be looking for longs here until we kind of showed some strength and started flipping some of these up close candles. So this up close candle here is an order block, right? So the idea is that when we're moving down, we're respecting these order blocks, right? So you can see here, we set these order blocks here. What happens? Price closes underneath it, sets the order block, returns to it, fills the orders to go shorter, attacks the next resting liquidity, sets this order block, purges that liquidity, returns to the order block, and it will keep just making that staircase pattern. Yeah, in this case, on the way down, comes up, retests the order block, on the way down, retest the order block, retest the order block, etc., until it doesn't, and then we look for that flip, right? So, for example, in here, you would see the order block set, price come down and retest it, yeah? Then you get order block set in here, price retest it there. For example, then what you're looking for is you're saying, okay, where's the order block in here that's suppressing price? Then you're looking for price to flip that area here and then use it as support so that we can trade it higher. All right. So that's certainly how I'd be looking at that on Ondo at the moment. Yes, Peter, certainly can. What's that? So that's Venus XVS. Yeah, no problem. So BC, what's your prediction for next month or two? I trust that we're close to the bottom. However, accumulation can take a while. Also, summer is to rest. Yeah, I mean, there's also the kind of the old saying of sell in May and go away, isn't there, right? So I think, first of all, for anybody that has any interest in seasonality and bits and pieces like that, I really couldn't recommend Crypto Burb enough for that. So one of the really biggest things to ever hit traditional markets was the Trader's Almanac, which was looking at seasonality of traditional markets, made by a father and son team known as the Hearsts. They actually approached Adrian, Crypto Burb, to do one for crypto. Yeah, so he's going to be releasing the first ever Bitcoin Almanac. And it's just seasonality is really, really big. And we got the fortune, obviously, of briefing with Adrian every day, and he kind of runs us through this. Now, I do pay attention to it, and it seems like, it would be silly not to. At the same time, it's one of those things where sometimes you can allow for too much noise. But yeah, I would absolutely go and check out Adrian's Twitter, crypto_burb. And he shares loads of amazing stuff about seasonality. I just wanted to cover this very quickly with crypto, and then we're really going to rip through the charts for like 15, 20 minutes and just really get deep into some TA on. We're going to stop there. We're going to do GME, Pepe, RNDR, ETH BTC, and then Venus XDS. All right. But just sometimes when we zoom out on these, it kind of gives us a little bit of context of where we are right now. Bitcoin, for example, has made an attack on its previous all-time high. We can see the rejections here in the long upside wicks. We had this huge expansion higher here. Just got a very simple range here. It's very simple Fibonacci from the last obvious swing low to the swing higher. And this, for me, has been a key objective, right? Henceforth, why once we climb back over here, we've been bearish. And since we tucked into here, not because I think that crypto is really, really going to kind of, all this kind of super bearishness that you see in the markets. It's because this is healthy for price action, right? Now, price doesn't have to always correct to the 50% or lower, but you will often see price engage with golden pockets or certainly come into the lower part of this range here. All right, if we were looking at this as example as our premium discount range, yeah, we can see we have these nice inefficiencies resting down here. The market likes to rebalance these, right? So that's why we look at that. And then you overlay that with the golden pocket that sits over this very small order block, and I can see price, moving lower. Seems like the peak of the bull might be late next year. Yeah, do you know what? I'm really not sure, Pete. I mean, I would say specialty, but my area, the area that I focus on the most is kind of intraday trading, so liquidity. So I tend to take those principles and apply them across the market in general. So for me, I think as long as we hold this area, then this is really bullish for Bitcoin. Like we hold this area, then we pump up, right? Typically, when you see these fair value gaps not respected, right, and we can pick a number of different options, but we'll use this one, for example. Right, when you see these inverted, is when they become purple, that means that we expected price to come down here, hit this gap, and then sell off, right? In the same way that we saw price come into this gap, yeah, it wouldn't be purple, it would be grey because it's not been violated. Look, price dips into it, finds all the fuel it needs and goes higher. That's what we've got at the moment with this, right? We just had a slightly longer run up. Price is still reacting off this nice gap. Now, if we do the reverse of that and we start really carving through that, like we see here, yeah, or on our other example over here, but this is a long example, so I just wanted to give you one that was aligned with this. Right, look how price just doesn't respect that. Closes below, keeps going. Then that's your indication that price is searching liquidity lower down, right? Then when you fail to respect that, what happens? Well, we create another gap here. Price comes into this gap and then sells off again. This whole thing happens until you get a gap like this one here, where price closes above it, violates it. Yeah, range is here, and then that's the springboard for price to go higher. We're just not seeing that there. We're not seeing that yet on Bitcoin, right? Price is grinding down with these candles that have these huge downside wicks. It's showing that there's absorption, there's buyers kind of stepping in, all right? Does that mean that price can't close below this? Absolutely not. If it does close below it, then my assumption is that price is seeking liquidity lower, so we'll trade it according to that, right? But as this stands at the moment, bearing in mind this is a weekly chart, guys, right? So this is quite a high time frame. We can just use our lower time frame charts. For this, I'm going to move to a 4-hour next, and then we just want to see that. We just want to see that recovery, right? We got it here. Look at this. Again, beautiful move in here. Key catalyst here was the inversion of the fair value gap. Right, price really ripped from here, and then always monitoring it at its very next clear and obvious point of liquidity, and that's capping the market at the moment. See, price just wasn't able to get over that. Price was considered a value bid down here, yeah, and then not value to bid up here. So now price is just kind of settling into this range. Just looking at this quickly on the 4 hour, by the way, for anybody that's interested, we have this 4 hour FVG here. Right, this candle closes in 30 minutes. If we close over this candle here, yeah, then I'm bullish, first of all, to 63,389, and then definitely back to this level that's capping the mark here at 64,677. All right. So now I hope that was good, guys. Just wanted to give you a little bit of insight on my thinking on that one. Just bear with me for 2 seconds, and then we're going to jump on and rip through these other ones for about 15, 20 minutes. Awesome. All right. So what have we got up first? We have GME. Here we go. So it's just ridiculous. Look at this. I mean, yeah, not really much you can say about that, is there? I would say that the key thing is there's obviously a mass manipulation going on with this. But even when these kind of things happen, look, all of this low resistance liquidity here. Yeah. So remember, like we were talking about, when you see these untapped highs, right? Then what you start to see here is a very, very, very shallow kind of rounded bottom, right? And do this as shallow as I can, yeah? So you can see how shallow that is. But it's coming in. But look, price is just struggling. Yeah, it sets this low, takes this low, takes this low. See how it's just kind of sweeping, and then it's kind of getting back above. It's grinding in. The candles, the bodies of the candles are becoming smaller and smaller and smaller. Ultimately, price came through, didn't quite sweep that low, which was what I thought it was going to do, and then it just had this massive rip. Unfortunately, there's just not a lot you can do with this. You can't be a buyer up here. I can't be a buyer up here. I cannot justify the risk profile. Exactly. It's a massive pump and dump stock, right? You see big influencers in the space getting on board with it. I'll never sell. I'll never sell. I know Andrew Tate's behind it, a few other people. It's not for me to criticize them or the people that follow them. All I would say is, if you're just going to blindly throw your money into something, and not suggesting anyone on here is doing that, but if you are, you have to obviously expect to get burned, right? Even when you do great, huge due diligence on these projects, that you can still get burned. But I'm always a little bit cautious when I see these people coming out, and, you know, you've got these big celebrities back in the projects. They don't really know much about it. They're not really from the space, right? You know, they're being paid for their endorsement of something to basically most of the time dump on their followers, which I think is really sad. But also on the flip side, there's a lot of good projects out there that people back. So it's quite hard to know. But basically, from a TA perspective, yeah, is this, yeah, you just can't get involved here. 15-minute chart. I mean, look at this, right? Look at this gap, right? Closed market there, the size of that gap. Price has now come back in to fill this gap. What would I be looking to do? I mean, I would only ever consider intraday trading this. I would have expected this to reject price here. If we close above it on this candle, yeah, what have we got there? Pre-market still in there when we open. So we close above it on this candle here. Then again, we've got that nice kind of low resistance liquidity resting down here that we could move to attack. But for me, just overall, it's just too high. Plus, look at these huge gaps that we've got here. Lack of order pairing. This is just huge investment, pumping the market up, pumping the market up. And then it really can it can dump so aggressively from here. So apologies, there's not really much more on that from me there. I just think it's a really, really dangerous stock to kind of get involved with at the moment. On a weekly scale, you can see that there's still potential upside for it here. It's run this high. So if we're looking at it from that perspective, then realistically, the next one it's going to move for is here at 86.17. But this thing could really just do anything. Peter, have you heard about American Rare Earths? I suggest you review it here, and so it'll be huge as long as you read and see what they're doing, what they have in reserves. Okay, very interesting. Thank you for the heads up, mate. I'll take a look. American Rare Earths. Thank you very much. That has gone on my notepad of interest, and I will check that out. So next one we're moving on to now, guys, is going to be Pepe. So AARNF. Well done, mate. Thank you. AARNF. Much appreciated. So Pepe, let's take a look at Pepe. So I was looking at this with someone yesterday because this thing just absolutely went off, didn't it? Yeah, maybe it wasn't. I'm trying to find them when we did our review on the other day. Oh well, doesn't matter. Let's just pop it onto this one. Well, no, we did the perpetual contract. Maybe we did it on OKX. Yeah, there we go. Pepe, here we go. Let's have a look. Do you know what? I mean, is it a proper apologies if I've murdered that. We'll make a little bit of time for you, man. We're going to pop a line under that afterwards. We will also take a look at TA. Oh, bit sensor. Yeah, sure. Okay, so let's really rip through this then. Let's get done what we're going to do. So really simply, I was aiming for these equal highs on Pepe. We've run them. Yeah, fine. So we did that at the beginning of the week. I thought we might get a little bit more of a pullback here to kind of sweep some liquidity and then really kind of start to attack them. But you can see here just by the chart that I've got up exactly what our plan was. When price was all the way back here, right, what we were looking for was, again, this low resistance liquidity. We can see how price had come in, taken out this key low here, right? Price had come in and taken out this key low here. And actually, again, look, this was kind of supporting the market, yeah? So we can see that there, acting as really nice level of support, absorption. Then we're saying to ourselves, as we normally do, price has got to be getting sucked up towards somewhere, and this fair value gap was exactly where it was getting drawn towards. So with that in mind, we were saying, okay, if price closes above this, what are we looking for? Well, then we're looking for this to be turned into an inversion fair value gap, meaning we're looking at this to offer support and then purge up, obviously, and go into all of those. And we can see here exactly what we've had up until the moment. And look how it comes into this. The wicks really respect it. The bodies respect this, sorry, the wicks draw back up into it. We set these equal highs, meaning that when price then drew back from here, I was looking for a slightly deeper correction here because I do like seeing these kind of 50% corrections. We just fell a little bit short of it here, but we were reacting from this gap, yeah. So we got the opportunity to get in there. And I think we got some nice long trades kind of called off in the bird nest as well. So where we are at the moment is this is capping the market, right? This level here. We can see this really obvious and clear. This is the high. Price can't get above that at the moment. Long upside wicks here, just really kind of dragging them down. Yeah, the 50% line for Pepe. Yeah, you're right. It really did respect it very well as a range. So what do we do now? It's just really difficult, right? Unless price is in price discovery, the rule is that when price sets a new all-time high and moves into discovery mode, then you just want to long it until it stops giving you long setups. It's the only thing you can do because you've not got any historical price action of where price has been, okay? So what we're looking for here is we're saying, okay, these long upside wicks show that, look, it's obvious. People that were pumping this thing down here and here and here are starting to sell off some of their positions. So how do we get involved in that if we want to? Well, first of all, we want to see kind of how it's interacting with these levels, right? And once again, if we rely on our old friend, the fair value gap, we can see here that we've got a very skinny, but nonetheless relevant fair value gap here, right? So in 22 minutes, this is going to close. And if price closes and respects this, then I favor us making a move on the current high. Okay, that's up there at 0.001163. We close below this, then we've got a really nice low down here that we're going to target at 0.00101119. All right, that's what I'll be looking at there. Looking at this on a slightly lower scale, if we move this to a 15-minute, how does that look? Well, as long as we continue to hold this, and remember on a 4-hour scale, so we have to wait for the 4-hour close. Yeah, what we're going to be doing here is we're going to be looking for a nice bullish reaction. We've cleared out some liquidity there, so what we ideally want to see with a move like this is as we've got this low, price purging into this low, yeah, then we want to see it recover this, and then we want this area to give us the opportunity for long setups up to here. And again, when we move to this level, we can see here there's not really much stopping this. Yeah, no real gaps for it to fill. Typically, price hunts these highs, the liquidity resting above them, same with lows, yeah. So for example, once we set these in here, we came up and took this previous high, it made a lot of sense that price was going to look to cool off, yeah? So as we look down here, is there many places that price could stop? There's this fair value gap here, right, on the 15-minute. So if you wanted to be really risk averse, and this is obviously on a low time frame, you'd wait for a close below that. Candle reopens here at 10:30 this morning, move to a lower time frame, and then you're looking for a good fair value gap inversion here. So this was 10:30. 1040 gives us a nice big clear and obvious FVG here. on the inversion here, you can be a seller down here, and obviously you're chasing down the next liquidity, which would be something like these relative equal lows or this higher time frame fair value gap. Right, just one example. There's obviously a load of different ways that you can get involved in this in terms of being a seller. So that's where I am at the moment with Pepe. So let's get that one. So that's GME, that's Pepe. Let's take a look at RNDR. Here we go. So let's see what's been going on with our TA as we've been developing this on RNDR. Now, actually, I remember this. I think we covered this on Monday again, right? Which was we created this inversion fair value gap. Price disrespected it here, meaning that there's an expectation for price to reach for the next liquidity, right? That's either the liquidity below the prior day, or in this case, the prior week's low, which was that, or the prior swing low, right? Now we can see what happened here is this got tagged, right? And then we recovered. Now, with these inversions, typically you want to see it act as pretty strong resistance and pretty quickly, meaning you want to see it that, and then a pretty quick move away down to the next liquidity. If you see it take internal liquidity here, or see this like the prior week's low, then we see price comes down. See how when we kind of reject back into this, we're really struggling to build any downward momentum. We close here, price sweeps this low and immediately recovers. From here, that then makes me quite bullish, right? Look, I know we hadn't closed above this here, but this shouldn't be disrespected to here. At the very worst, you would look at something like this and say, okay, maybe we kind of return to the equilibrium, and look here how the bodies respect that here and here. But then when this one closes above, we do a couple of things. We change our state of delivery, right? Meaning that we've gone from bearish, we violated that by closing above it. That then makes this a bullish order block, right? Which we just do is a thick black line. All right, and now we'd be expecting this to offer support for price to then move higher. Okay, so that was our thought process on a weekly basis. Looking at this on a daily, and I won't remove any of this TA. I know it looks a little bit messy, but we want to be able to review this. This is the area we were looking to act as support, and we can see that that's now been lost. Okay, so that's now become an inversion fair value gap as well, meaning that we expect price to dive deeper. We had highlighted this order block here to act as support. We've really kind of dropped down into this now. So it leaves price at a really interesting situation. I really like this low. It's what's known as an intermediate term low. It's just to think of it as a low within a fair value gap. It would be the same as a high that is within a fair value gap. They tend to make really good liquidity pools. So while we're kind of bearish here and we violated this fair value gap, then for me, I think there's a likelihood that we kind of purge down a bit lower to take this liquidity. And then when we look at the high time frame order block we've still got drawn on here, it kind of gives us a lot of confidence that we can clear out some liquidity, dip into a nice pool of, bullish liquidity here, and then kind of get that move higher. Obviously, the more we start to close below here, the weaker that is showing, then that can be considered a sign that we could be looking for price to move even lower. However, again, a good way to do this is to look at our premium and discount to just take the last price leg, right? If you're struggling with this, by the way, just say to yourself what's clear and obvious, because when this closed, before we had these candles, then when we set that swing high, we've got the down close candle, I would have had the range here. And we can see what happened. Price had dipped into this fair value gap, which is really bullish, and had a reaction. However, I can then extend the range up to here because this for me is still one clear and obvious price leg, when we've set that. So again, if we look at that, the intermediate term low, the order block that's down here would give us that nice purge down back so that we can be a buyer down here in discount, all right? On a 4-hour scale, I mean, this kind of just plays into things even more here, right? Because we can see what's happened is price has reacted off of this bearish FVG. Right, let me just zoom in a little bit so you guys can see this. Price dipped into this here. Yeah, just get this aligned perfectly. We see touched it just a little bit and then really aggressively sold off, the same as it did with this line over here for the order block. So we can see how these higher time frame and medium time frame areas of interest or points of interest are really starting to overlap. Okay, so then when we see that we've got this liquidity target down here, we're saying, okay, well, where's price currently delivering from? We look over here and we can see that price is still within this bullish FVG. So really simply, if we close below this on a 4-hour scale, and again, in about 15 minutes, we close below here, my target then becomes this intermediate term low, which is 9.4078. All right, let me just check on the questions very quickly, see if I've missed anything here. Peter, when you review American as in the US and ARR and AS, it's important to read on their projects and get an idea of massive quantities of clean, rare earth. Fidelity has shares in it. Okay, that's really interesting. Yeah, I'm going to dive into that. I think I'll go and throw it over to our fundamental team as well to have a look. Well, most of these crypto moves go to zero anytime. Yeah, I think so. Jupiter or 1inch? Not too sure. I've always been quite impressed with 1inch, actually. I had the pleasure of kind of having some interaction with their team over the years, and they've got a fantastic team there. They really, really have. And I think they're a really good protocol. Again, unfortunately, not really my area of expertise. I kind of don't like to advise people on it. My knowledge on it is good, but certainly not in the professional realms. So I kind of I'm very fortunate to have a trading team around me that deal with stuff like that. But I would recommend just popping onto the TBN server. You can go on the Discord or whatever, grab a free membership, come and like quiz the FA team and bits and pieces on there, or kind of reach out on Twitter as well, which is fine. But yeah, typically most memes don't have a utility to them. So they are exactly what they say. They're kind of, they don't have any real functionality. It's just a marketing angle. But some do, like Floki with Token, that started off as a meme, became really incredible utility token. So it's very hard to kind of tar them all with the same brush. But at the moment, people were really, really kind of skeptical of memes, but yet they seem to be kind of really leading the drive. And it's a very, very degen push. Yeah. So looking at this, what one are we on to now? So RNDR, that's basically where I am there. Hopefully that's been useful, guys. Close below this bullish FEG here, which we can see has acted as support once and twice now. We see we're starting to really carve through it and disrespect it. We're also delivering from this bearish FEG here. So I think if we close below this here, I think we purge down these lows. If not, we have just swept these lows. Maybe that's enough to just get enough liquidity back in here that on the lower time frame, we can look for this thing to do one of our nice 50% retracements here. Yeah. And then this fair value gap up here looks like a really, really good target. So that's why we always like to have a plan to trade this both ways. All right, guys. So that's RNDR. Let's have a look. About 10 minutes left. ETH BTC for our friend Hans. Let's have a look. Righty-ho. So what have we done here? Yeah, this has come back to looking weak. I thought this was going to do something here. Intermediate term low. We got this initial reaction, and this is when, obviously, we're talking back in January now, but I really thought this was going to be the kind of catalyst to pump on like a good kind of all season rip. Obviously, we did have this rip again when we're looking at our rule of 50%. So if we take the obvious kind of range, price kind of comes down into here. So that sets our low. That would set our high. Price ultimately was just kind of finding its way back up to this fair value gap here before then rejecting again. So on a weekly scale, this looks pretty heavy to me. I'm not going to lie. But we do have a weekly low here. Price is just about to come and engage with that. And just looking over here to the left, if we maybe have a little bit of a sweep, you see we've got this nice gap over here on the left. Price could easily sweep this low. Then we'd want to see it recover and get back above here. All right. Obviously, we're looking at this in terms of a bit more strength coming into the alts as well. So I think while we're down here, it's a bit treacherous, if you were looking to kind of short this down here, but I'm looking at this to have a reaction here at, 0.04622, right? And we want to see something like this. We want to see a clean low set, that recovered, right? And then, we're all the way up here before the high that swept the low, but I think that's a really, really good target to go for would be this high here. If we kind of make this recovery back in the range, obviously we need to be aware of this FEG down here as well. I think that kind of sets everything up there, really, when we look at that on the daily. The 4 hour we would just use to refine it a little bit more. So again, you can see how price is gravitating down towards this key liquidity level, that we want to see a quick V-shaped recovery here. Yeah, and then look to get on board with kind of building positions, because we can see that this looks a lot nicer to long into here. From here down to here, you've got that low resistance liquidity, right? These untapped highs. So price typically looks to run these. Then it might continue down or it might continue up. We play the strength to the upside or we play the strength to the downside. Yeah. Your choice. It's like BTC or ETH. I will go for ETH. Yeah, it's a good analogy there with you looking at that across across men and women as well. If I was to choose one, Miko at Floki or Bonks to $500 for a 10x, which one? Really, really difficult, mate. I mean, I'm, full transparency, I've been a multi-stage investor in Floki. I've had exposure to the team down there, the project, the way that they've handled themselves. They've got one of the best communities and one of the most active communities out there as well. So yeah, it's an interesting one. It's kind of, if you look at it on that, I'd look at it from a technical standpoint. I think Floki for me are well beyond the kind of meme. I think they've got real kind of longevity in the project. So I'm happy to kind of accumulate at this phase. But again, one of those things where you really kind of need to know a little bit more on a fundamental side, ideally. So Venus XVS. What's the ticker for it, buddy? Unless it is that. I'm guessing it's this one, is it? I'll take a look at this one anyway. But if I've got this wrong, Peter, please do let me know. Let's take a look at this. Okay, well, I mean, Venus XVS. It is Venus. So is it this one that I've got up here, mate? Venus XVS. Yeah, because I'm not. Yeah, Venus XVS isn't coming up with anything on there. Maybe it is this one, XVS USD. Yeah, it is this one. Okay, perfect. So yeah, let's have a look. So I think this one's quite interesting at the moment, right? Huge upside potential on this. Look, I mean, when we really zoom out on a weekly scale, previous all-time highs here, we can see we had this really, really, really big long run up. And then we came into kind of like the early stages of 21 and then obviously got caught in that really big that. No, I am still, don't worry, I've not forgotten about you. I'm just doing them in order. So as you were last, I'm afraid, in on the boat there. So TAL is still on my list. Don't worry. We were just covering RNDR for another one of the patrons, but I haven't forgotten about you. Although I do sometimes accidentally, so always good to remind me. Now, there's this huge inefficiency down here. It's one of two ways to look at this. This often provides a really, really good draw on price. It's also worth remembering that we've been in this huge, basically, consolidation phase. You're very welcome down here. Now, what I do like about this, right, is that if we're looking at it over here, I'm saying to myself, okay, first thing I'm saying to myself is, look, where is price delivering from? Okay, or where was the last point of delivery? So price was delivering from here, from this bearish FVG. Now price came and set this, it swept this low here, right? Price came back up, didn't really find the momentum to draw deeper into here. When we look at these type drops, it's always nice to kind of put our Fibonacci on there. And those of you that are interested, by the way, this is just a standard Fibonacci retracement with a 0, a 0.5 and a 1, yeah? And then I just make the 0 red, the 0.5 red and the 1 green. You can then just use your slider to make that kind of any color you want. And then just make sure that you've got background ticked on. Yeah, and then you can use that slider to make it as kind of clear or opaque as you like. Just gives you a good indication of when you're looking at these and you're saying, okay, when you see these drops or you see these pumps and you're looking for price to kind of respect some kind of retracement, 50% is a good area to target. And then look for the inefficiencies, the gaps, the order blocks, for example, that can be laying there where price could be heading. So with that in mind, let's just get rid of that for a minute. This is either a very, very strong bearish reaction, yeah, meaning that if we were expecting price to come and dig deeper back into this towards the 50%, sweeping this low probably should have been the catalyst to do that, because if not, then we're looking at where price is really being held at the moment. And it depends what your kind of rules and order blocks are as well, because some people, I was talking to a chap the other day, found it really, really interesting, who, studied under a lot of the similar people that I did, was saying that if he sees an order block where the wick or the wicks are more than the bodies, he allows for the wicks, right? But if the body is more than the wick, then he just allows for the body, right? Personally, what I've always done is just, if it's a bullish order block, meaning that it's this side, I then just take the flat edge of that and then draw it down to the lower wick. If it's a bullish order block, for example, then it would be the opposite, yeah? So, for example, let's just say these, I kind of do adjoin the order blocks as well. I know that's got a particularly long wick, and then I just eliminate the abnormal wicks. Because for me, the volume happens within the bodies, yeah? So if we have adjoining candles here, then I make an allowance for those. ultimately we can see that that's kind of had an effect here as well. But I would just say go and study different people and make sure you've got that information in your data sets. I've always found that just using this part works really well for me. So with price kind of with that, we're then saying, okay, well, if price is now drawing lower, where can it be drawing to? And the question is, if we've swept that low, then it's this low here, which sits at 8.244 basically. If price is then going to kind of have a bullish catalyst here, then this is the intermediate term high that sits up here at 11.64. So now if we drop this down onto a daily, we're saying to ourselves, okay, well, what are we respecting? What are we disrespecting? And we can see that here we respected this bearish gap really, really well. Right, so nobody's closed above it. Price then ultimately is looking lower. First thing we would have looked at here is then looking towards this fair value gap here. All right. And then for price to offer support here, we can see that it didn't. And again, how the candles give you a lot of insight, right? We can see these long upside wicks. Price is clearly getting driven deeper down and down and down here, all right? Then when we close below it here, then my bias flips to bearish, and I'm looking for price to come and take this out. For me to flip back to bullish, I would need to see price reclaim this level here and close above on a daily scale, all right? If you're looking to finesse this a little bit more and you want to bring this onto a 4 hour, once again, we can see this. But something I really like on the 4 hour here is we can see that we've got this, again, you know, low resistance liquidity resting up here. And that does really often provide a really good place for price to kind of go and search out. So we've swept these lows. It looks like we've got a decent reaction here at these lows, right? Look at the long downside wick. So maybe price is looking to kind of have a retracement a little bit deeper up into this. Okay, we don't have any 4 hour fair value gaps here, right? So we can't say what price is drawing towards. The next clear and obvious area that price could be looking towards would be this, which is at a 9.53, okay? So I think while price has swept liquidity from the lows, we're not delivering from anywhere in particular. I'd probably move this down to a lower time frame. Okay, and I would say this, you know, we're kind of 30 minutes away from the open. Not sure I'd be opening any positions at the moment. I tell you as for why, because we have huge news about to drop in about 30 minutes. But on an intraday basis, close below this, then my assumption is that we start targeting some of these lows. Again, you can see the untapped lows that start to build here, leaving a nice liquidity pool. What we've done here is had this big spike up back into a higher time frame bearish gap, taken out liquidity above these highs, yeah, and now price is delivering, right, from this bearish gap over here. Yeah, we can see this is where we get the initial rejection from. So once again, I would say while price kind of holds here, if you're looking for an intraday trade, again, I wouldn't recommend doing this at the moment because of the news. But if I was dropping this down, we didn't have that news catalyst, or the news had settled and we were delivering from this gap, my low time frame play here would be something like this. I would want to see a low set, respected, the high that set that low, yeah, closed above, and then I would look to kind of enter in and around the line here. So we got our sweep. And then we're looking for the high that swept that low. And then what you can do is you can be a buyer in and around here, looking to kind of draw that higher. Now, don't get me wrong, a little bit treacherous here because we have a lot of gaps. But as long as we hold this, yeah, then I think we're more bullish than we are bearish. We've swept a lot of liquidity under these lows. But if we come and close back below it, then I do think that it's much more likely that we start to sweep them out there. Okay, guys, so hopefully that has been useful. And then for our lovely friend Amin here as well, we're going to look at TAO. Okay. Okay, so guessing this isn't the metals yet. Here we go. Let's take a look at this one, shall we? Yeah, I did think it would be the case. That's fine. So, daily, right? Again, what are we doing? Where are we delivering from? Where's liquidity resting? Liquidity is resting above here. Okay, so we have this. So now it's looking like price wants to kind of pump up to that. That's a really lovely reaction down there. We've not seen a close below this, the lowest low. You can see, in fact, price close on that to the T, making those equal lows. Now we've swept those equal lows. My expectation is for some kind of bullish reaction here, all right? And in terms of where, once again, I would be favoring a drawback up here to this kind of 50%. And we can see right on that cusp line there, the separation line, is we've got this bearish fair value gap. So maybe that's what price is being drawn towards. So immediately in my mind, I've now got a playbook whereby, okay, it seems a bit low to short this at the moment, so I don't think that's the play. I love the idea of longing into this level here on the lower time frames. And then if we get the daily close above here, my expectation is for price to come and take liquidity above this higher. We do want to be aware that we have a very small fair value gap here as well. So we would factor that in if you wanted to be super safe on a daily basis, right? Then I would recommend waiting for a close above that one here. Yeah, so on a daily scale, we get this candle close above, in which case then, I'd be targeting that for certain. Let's just get a little bit more context here, shall we? So, okay, if we're saying that we think price is looking to draw up, then what supports our theory? Well, first of all, we've got these beautiful long kind of abnormal wicks up here that's almost certainly currently drawing price higher. We have one inefficiency here that price has just closed above. So this would be my play for today, ladies and gents. And again, I wouldn't take this at the moment heading into the news, because if we get really aggressive newsprint, if the market turns particularly hawkish, meaning it flips bearish here, then risk assets like crypto, typically you see money flooding out of them and going into the dollar, bonds, yields, etc., safe asset classes. So nice recovery here, and I like this strong close above, actually, I have to say. I think that price is this would be a really good play for today. See this little kind of pullback here into the New York Open, and then look to trade this higher. I think for me, again, we'll look at this close on the lower time frames. We've built this kind of low resistance liquidity down here as well, which will be even clearer on the lower time frame. I think, again, if price closes a 4-hour candle underneath this, then I think we purge this lower, right? But let's remember, this is the level that's supporting the market at the moment. So on a 15-minute scale, how can we get involved? Oh, beautiful, absolutely beautiful, right? So we've had this, whether you consider this the low or the high, semantics really. We've had price now draw down into this lower 50% here, right, which is really nice and bullish. We could see price correct further down into here, and I wouldn't mind that at all. What I would want to see as the trigger is that's currently a bearish FVG. We want to see price, or I would want to see price close above this. Yeah, and ideally not by too much either, and say, okay, that's showing us a bit of strength here, in which case we can then start taking this level to level, targeting that, zooming out, looking across here. Okay, what else have we got that can be drawing price up? We've got these fair value gaps in here acting as this draw. And again, this little section here, we've got this beautiful low resistance liquidity. Price can just look to attack that. So drawing it into this high, if we got a good setup here, for example, I'll do one just purely as an example, right? Let's say you get that, come above, yeah, you're in here, stops under the OB, targeting this high, and you've got, say, a 1 point. As long as you've got a 1-for-1 to make the risk worth it because you're playing the momentum, then when price gets to here, you can just move your stop loss to entry on the premise that basically you don't expect price to come back to your entry price. You don't expect it to come back to your entry price here. You expect it to show strength and keep making moves on the highs, all right? So that's how I would look at that. But again, as long as price is delivering and underneath these bearish fair value gaps, then we would be looking, to short this down to here, all right? We've seen that little 50% correction, but as long as it continues to show weakness here, then we would look at this on the lower time frames, yeah? And you could say something like this. You could look for this being your sweep, yeah? So that being a sweep of the high, all right? You would then look for price to break down, set that lower high, and then you could look to short that down into there, all right? Ultimately, what you really want to see here, if you're bullish on crypto, certainly, is again, we can see we've got this kind of inverted fair value gap here, right? And what does that lead to? That leads to us almost certainly attacking the very next liquidity pool, which rests above the next swing higher. Now we need to see if this area holds, yeah? We want to see this build as a base and price continue to move higher until we fill this inefficiency here, close above this, in which case, we then fill this, price comes back up, uses this, bakes a base for support here, and gives us a free rein to then, attack the liquidity resting up there. All right, guys, that's how I'd be looking at it on an intraday basis anyway. All right, guys, look, I hope you've enjoyed the stream today. It's been great being on with you, as it always is. I know we're trying to get through a few more assets here today, so hopefully that's been helpful for everyone. Quick question here from Peter. Is it a good idea to have over 20 coins in the portfolio for this bull run, or just 5 and load up on the 5 instead of the 20? Again, it kind of comes down a lot more to your risk appetite. What I typically do with my portfolio is I break it into portions, so I have high risk, medium and low risk, and then basically I'm looking to hold those low risk coins. That can be your Bitcoin, Ethereum, other projects that you've got real good kind of high conviction in, just building them over time over a number of years. And then the flip side of that is then on the kind of the low cap coins where you can see these big moves. I'll typically allocate 20 or 30% of my portfolio towards high risk assets like that, and just expect to lose it all. And what typically has happened to me in previous bull markets are that 60-70% of them will just either die away, or there'll be some kind of scandal, or the project will just die, or the founders will disappear. But the remaining 30-40% that you've got can do some really, really big moves. All right, not my area of specialty there, Peter, but thank you for the compliment. But also do make sure to check out people like Chris, Crypto Assessor, who works with us. Pop your head over onto the TBN or come and connect with me on Twitter and I'll introduce you. But also people like Crypto Kazi, who's just really, really sick with stuff like that and always giving away a lot of free alpha. Are really, really good people too. All right, guys, Raphael, great to see you on here as well, mate. Huge thank you to everyone as well. Hans, brilliant to see you back on there today, mate. Hopefully see a lot more of that in the future. We had almost 3,000 people join us live today, which was wonderful. So a big thank you to all of you. We're about to flick over right now and go on to our live trading club. So we're going to be looking to do some scalp trading on some crypto assets, but also focus on the NASDAQ and some FX too. So I'm going to see you legends over there from our trade club. If anybody's interested in that, you can find details down in the description how you can get involved as well. Also, please do take a look in the description and go and check out Femex Pulse. We've been working with Femex Pulse for a little while now, really helping them kind of build this amazing ecosystem on there. There's such a good crowd over there, and they're rewarding everybody that uses the platforms just for asking questions. You can earn, I think it's like 100 points a day just by engaging, asking questions, sharing posts, and all of those points convert to USDT. It's a really brilliant system. And I have to say, I found the trading platform absolutely flawless. So I'm going to share some more on that recently as well. But do go and check that out. We share a lot of original content on there as well, guys, and you get all of that access for free. All you need to do is just sign up and get involved. All right. I will do, mate. Well, I'm going to be back on here on Monday. Hopefully I'll have time to have a little look at it over the weekend, and we'll see where we are, and I'll get your thoughts on that. All right, guys. Have a fantastic week ahead. Do trade safe. Please be aware that we've got some seriously market shifting or potentially market shifting news dropping in about 24 minutes from now. Okay, so do be careful with that. I look forward to seeing some of you in a moment on Trade Club, and then the rest of you, I look forward to seeing you in and around the nest. Take care, guys.